How Gautam Adani versus Hindenburg saga has unfolded so far. When one of the mightiest conglomerates of a country calls off its fully subscribed follow-on public offer, stating that it would be morally incorrect, it is sure to spook investors. The Gautam Adani-led Adani Group, whose stocks were one of the key drivers of stock markets since the past 3 years, is now finding it hard to even stay in the positive zone, and all of it happened in just 1 week. In other words, a major part of his over $100 billion earnings in the last 3 years was wiped out in the last week. The fall has been so massive that the group's market losses have now swelled to over $100 billion, sparking worries about their potential systemic impact. The market rout started January 25th, after a US short seller Hindenburg Research published a report alleging stock manipulation by the Adani Group and raised concerns about high debt and valuations. Hindenburg released its report 2 days before Adani Enterprises' 20,000 rupee crore FPO was about to open. The company had already raised 5,985 rupee crore by allotting shares to anchor investors. In the report, Hindenburg accused Adani Group of a broad and stock manipulation and accounting fraud scheme. It cited 2 years of research, including talks with former senior executives of the company and reviews of several documents. The report comprised 3,200 words and alleged various kinds of frauds and account manipulations by Adani Group companies over the years. It said that key listed Adani companies have taken on substantial debt, including pledging shares of their inflated stocks for loans, putting the entire group of precarious financial footing. It also said that 7 Adani-listed companies have an 85% downside on a fundamental basis due to what it called sky-high valuations. Further, the report highlighted accounting irregularities and sketchy dealings enabled by virtually non-existent financial controls. Adani Enterprises has had 5 chief financial officers over the course of 8 years, a key red flag indicating potential accounting issues, it said. Citing evidence of stock manipulation, Hindenburg gave reference to SEBI's investigation and prosecution for more than 70 listed entities and individuals over the years, including Adani promoters, for pumping Adani Enterprises stock. Hindenburg also has short positions in Adani companies through US-traded bonds and non-Indian traded derivative instruments. Caught in the corporate stock market storm, Adani Group issued a statement on January 29th against Hindenburg's allegation few days later and likened the damning allegations to a calculated attack on India, its institutions and growth story. Stating that all accusations were nothing but a lie, the group said that 68 of the 88 questions posed by Hindenburg were already addressed by it through annual reports of various group companies, offer documents, and stock market disclosures. Of the remaining 20 questions, 16 were relating to public shareholders and their sources of funds, while the rest 4 were baseless allegations, it added. The report is rife with conflict of interest and intended only to create a false market in securities, Adani Group claimed. It is also highlighted that mala fide intentions were apparent given the timing of the report when Adani Enterprises was about to undertake the largest equity FPO. Needless to say that Hindenburg has created these questions to divert the attention of its target audience while managing its short trades to benefit at the cost of investors, they added. In addition, the group said that at various points in the report, it was clear that Hindenburg Research didn't have a good understanding of the Indian legal system, the accounting practices, and how the fundraising processes work in the Indian capital market. As an example, it said that Hindenburg Research had falsely claimed that Emerging Market Investments, DMCC, gave a loan of $1 billion to Mahan Energen. In reality, Emerging Market acquired the $1 billion unsustainable debt of Mahan Energen from its lenders for $100 as a part of resolution plan duly approved by the National Company Law Tribunal, NCLT, under the Indian Bankruptcy Code. These are mala fide attempts to question bona fide transactions, the rebuttal noted. In response to Adani's rebuttal, Hindenburg on January 30th dismissed charges that its report was a calculated attack on India. In its defense, the US short seller said that fraud cannot be obfuscated by nationalism or a bloated response that ignored key allegations. Standing by its report that alleged fraud at the second largest conglomerate in India, run by the world's then third richest man, Hindenburg said it disagrees with Adani Group's assertion of its report being an attack on India. To be clear, we believe India is a vibrant democracy and an emerging superpower with an exciting future, it said. We also believe India's future is being held back by the Adani Group, which has draped itself in the Indian flag while systemically looting the nation. A fraud is fraud even when it's perpetrated by one of the wealthiest individuals in the world, it said, adding, Adani also claimed we have committed a flagrant breach of applicable securities and foreign exchange laws. Despite Adani's failure to identify any such laws, this is another serious accusation that we categorically deny. Hindenburg said it found Adani's lack of direct and transparent answers, on the allegations of use of offshore entities telling. On January 24th, the day Hindenburg released this report, a share of Adani Enterprise coasted 3,442 rupees and 75 cents at close of day's trade. Today, the stock is priced at 1,564 rupees and 70 cents. That is a fall of 54.55% in just 6 sessions. On Thursday as well, the stock tanked 26.5%. Most of the other group firms also declined. If we look at Adani Ports, the stock has declined 39%, Adani Power 26.43%, Adani Transmission 43.49%, Adani Green Energy 45.75%, Adani Total Gas 56%, and Adani Wilmar fell by 26.46%. Cumulatively, in 6 days, stocks have faced a combined erosion of over 8.6 rupees lakh crore. As a result of this massive drag in stock prices of companies, Gautam Adani's position in Forbes' real-time global richest ranking has slipped to 17. Adani has now lost his tag as the richest Asian person. His wealth now stands at $64.2 billion. However, according to Bloomberg Billionaires Index, Adani is placed at 13th position with a total wealth of $72.1 billion. In September last year, Adani's wealth had surged over $155 billion, making him the second richest person in global billionaires ranking and the first Indian and Asian to break into the top 3 list. In a little over 2.5 years, Gautam Adani's wealth had galloped over 13 times. In January 2020, just before the onset of COVID pandemic, his net worth was about $10 billion. Seeing the beating Adani Group companies suffered on the bourses since last week, the board of directors on the group decided to call fully subscribed FPO of Adani Enterprises. In a regulatory statement to the bourses, Adani Group said that it has decided not to proceed with FPO in the interest of its subscribers. Given the unprecedented situation and the current market volatility, the company aims to protect the interest of its investing community by returning the FPO proceeds and withdraws to complete transaction, Adani Group said in its official release. The 20,000 rupee crore worth FPO was fully subscribed just a day ago as investors pumped funds into the flagship firm. However, the flagship company of the Adani Group had a lackluster start to its FPO, with only a 1% subscription on the first day of the share sale. The offer was open for public subscription from January 27th to 31st, but it managed to get investors on the last day of the share close on Tuesday. Total bids for 5.1 crore shares were received, against the offer size of 4.6 crore shares. On January 31st, the third and final day of retail building, representing a 112% subscription. This excludes the 5,985 rupees crore anchor book, a part of the QIB portion that was completely subscribed the day before the FPO had opened on January 28th. Adani Group said that it will return money to investors and thank them for their support and commitment towards the group. The fundraising was critical for Adani, not just because it was seen as a move to cut his group's debt, but also because it was being seen by some of the gauge of confidence at the time, when the tycoon faces one of his biggest business and reputational challenges. The Securities and Exchange Board of India, SEBI, has started examining the constant crash in shares of Adani Group. It is also looking into any possible irregularities in a share sale by its flagship company. A Reuters report said, SEBI is undertaking a full-scale examination of the fallen shares, a source told Reuters, declining to be identified as the matter is confidential. Meanwhile, Reserve Bank of India, RBI, has also sought details about lenders' exposures to the Adani Group. Country's largest lender, SBI, had said its exposure to Adani Group is fully secured by cash-generating assets in an attempt to assuage investor concerns. For staying updated to this trend, do subscribe to the channel for more insights on finance so you can be at a better position to take your upcoming investment decisions.